This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Hey, Joe Crummy, if you're not earning at least 40% on your savings, stocks, mutual funds, or other investments, you need to listen to Jason Hartman. Here's Jason.
Most of the great fortunes in this country have been built one of two ways, using other people's sweat or other people's money. One requires all the headache of starting a business. The other is much easier. Just use the equity in your home or the savings in your bank. Your home equity can grow a real estate empire that could make you a very wealthy landlord in growing real estate markets. Begin your journey on turning one castle into a kingdom. Go to jasonhartman.com.
Welcome to the Creating Wealth Show with Jason Hartman. You're about to learn a new slant on investing, some exciting techniques, and fresh new approaches to the world's most historically proven asset class that will enable you to create more wealth and freedom than you ever thought possible. Jason is a genuine self-made multimillionaire who's actually been there and done it. He's a successful investor, lender, developer, and entrepreneur who's owned properties in 11 states, had hundreds of tenants, and been involved in thousands of real estate transactions. This program will help you follow in Jason's footsteps on the road to your financial independence day. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Welcome to episode 1988. Thank you so much for joining me today. And let's first dive into a bunch of miscellaneous things I need to talk to you about today, not the least of which is the commercial real estate market. Further signs of distress continue. So you probably know that some of the big financing entities for office space and large commercial products are life insurance companies. They collect your premiums. They have a long time horizon. They've got their actuarials that figure out when they're going to need to pay out policies and so forth. And they take that money and they invest a lot of times into large commercial projects, large office buildings, large apartment complexes, industrial properties, whatever, commercial properties, right? Big scale things. And we are seeing these insurance companies shy away from the office market. This article is from the Wall Street Journal. It talks about how many insurance firms have become skittish about rising vacancy rates and falling rents in the office market. The retreat from lending by insurance companies is bad news for building owners at a time when other lending sources have all but dried up. Okay, banks, the largest commercial property lenders, have been pulling back since last summer. Well, I would argue that's a compared to what statement, because they were pulling back even before that, but more so since last summer. Okay, fine. So as I've been telling you for a good 19 years now, housing is the best investment in the real estate game, and real estate is the best investment going, right? Income property is the most historically proven asset class in the entire world, and housing is the one thing that, at least so far, has not been outsourced and probably can never be outsourced. Everybody needs a roof over their head. Everybody needs a place to go home to at night. But some people now need a place all the time, right? That they can work out of their house. So as the remote work trend has accelerated, more and more people need even larger homes so they can have their office at home, obviously. With office space, they can outsource those office workers to India, to the Philippines. Those are two of the big outsourcing hubs. Call centers, administrative work, legal firms, having Indian firms do their discovery process, which is a really big task in the legal business. So a lot of this stuff, you're paying some law firm or some accounting firm hundreds of dollars an hour for their associates, which is, of course, ridiculous. But they're hiring people many times in India, and they're paying them, $4 an hour, $6 an hour to do the work they're billing you $400 an hour for. What a scam, right? But it is the way it is. And hey, they oversee their work. So that's fine. But that lessens the need for office space in the United States or in whatever primary market you're discussing. Now, we see China with globalization, right? Now, this trend is reversing. And, that really started to a major degree under Trump. And Biden, oddly enough, I know for the right-wing people, you love to hate Biden, of course, and the left-wing people love to hate Trump. Before Trump, it was all George Bush's fault. What happened to George Bush? He gets no respect anymore. Now it's all Donald Trump's fault. Biden has largely really been a Trumper. I mean, so many of the Trump era policies, Biden actually just continued them. Like, it's nothing very original about the Biden presidency at all. And how could he do anything else? He's basically taking a nap. So, there we go. But we've seen that trend reverse. But, in the past, China, the workshop of the world, and still the workshop of the world, outsource the need for industrial properties to China. You lessen the need here because a lot of that manufacturing is being done overseas, not just in China, but many other places. So you lessen office space, you lessen industrial property demand, and then you also lessen retail demand because that's been outsourced to the internet. But the one thing at the end of the day that can't be outsourced is the home. You can't outsource the house, right? You need that to be right there in that primary market in the United States, for example. This Wall Street Journal shows 15%, the percentage of insurers with commercial real estate lending businesses that plan to shrink their activity this year, according to a survey from Goldman Sachs Asset Management. That's more than 3 times as many in the same survey last year. So this is a really big pullback, and you're going to see more pain in the commercial real estate market. Now, let's talk about the multifamily housing market, because that's a segment of commercial real estate. And we've talked about this quite a bit. And I just got this email today, which I thought was interesting. These Miami properties with huge rent cuts. And, when you see those rent surveys, folks, take it with a grain of salt, because what you're mostly seeing is multifamily housing, not single family housing, which acts quite a bit differently than multifamily housing. But look at these rent decreases. These are giant cuts and discounts. In Miami, a 1-bedroom, 1-bath condo that used to rent for $4,530 a month, now $2,830 a month. Here's another one for you. This is another Miami property, $3,770 per month, now down to $2,950 per month. And here's one more for you. 2-bedroom, 2-bath, formerly $4,370 per month, now only $2,730 per month. These are giant price reductions. Miami, look, is a cyclical market. I mean, of course, Florida is booming, but Miami is the one really, really cyclical part of Florida. Not a linear market, not a hybrid market, always been cyclical. During the last changes, during the Great Recession and so forth, we saw the same kind of craziness in Miami. But it's just an example of how multifamily is struggling with oversupply, and we're going to see this continue, but it will eventually get absorbed and it will eventually work itself out. It's just going to take some time. Because remember, at the end of the day, there is still a housing shortage in the United States. Okay, crypto. Talking about crypto a bit. Look, I have said forever that I would love to be wrong about this. Ever since I first learned about Bitcoin when it was $74, I said, I would love nothing more than to see this decentralized currency succeed and be the thing instead of a central bank and a Federal Reserve and all the control they wield over us. But I never thought that it could really succeed in any big way, because the forces against it, the two most powerful forces the human race has ever known, governments and central banks, will do their best to limit it, destroy it, hurt it, minimize it. They'll do whatever they can. And here's yet another example. The SEC is charging another crypto trading platform, Bittrex, for failing to register as a national securities exchange, a clearing agency, and a broker. And you're just going to see this continue. There are so many attacks from so many fronts on the cryptocurrency world. And again, they represent competition for the main product of any government, any country, any central bank, and that is their currency. That is always their main product. So you're going to see these continue. don't forget, we're going to get into some inventory numbers here in a moment, but be sure to join us on Friday for our live Zoom meeting with Ron Legrand. This is totally free. It's a 2-hour Zoom with the master, Ron Legrand, but we asked him to focus on one special narrow topic that he teaches, and that is how you can eliminate property management in your rental properties, how you can collect a big upfront sum of money today from your tenants by turning them into tenant option buyers, and how you can get tenants to do maintenance and basically eliminate all of those management headaches. So go to jasonhartman.com/grand, GRAND, as in Ron Legrand, jasonhartman.com/grand. We just thought we'd kind of shorten that, and register for this free Zoom meeting on Friday. We will look forward to seeing you there. A lot of people have asked, is there going to be a replay of this? The answer is probably not. Maybe we'll have the replay available for like our pro members or something like that. But look, folks, when there's a replay, let me just tell you something. I know the way this works with human behavior. I know the way I work. It's when there's a replay, there's no urgency. Okay. This is a live event. Okay. Even though it's virtual and it's super easy to attend just right on your computer or your phone, it is live. Okay, and we've got the master himself, Ron Legrand, super famous real estate educator for decades and decades. He's joining us on Friday to talk about how you can eliminate property management, how you can get big upfront sums of money from your tenants today, and just make your life a lot easier. So this is going to be the focus of this 2-hour free live Zoom meeting, jasonhartman.com/grand. Okay, let's talk about some inventory numbers for a moment, and we'll keep this short and sweet. So inventory has fallen again. Yes, inventory is getting lower. Only 405,000 homes for sale in the United States, some of the lowest inventory in history, but it was lower, of course, during the pandemic, during these really crazy times where housing was super tight, okay? And last year at this time, 271,000 homes for sale. Now 405,000, down from 412,000 last week. Inventory still declining. If you're seeing this on video, you see the chart. It tells the whole story. If you look at, any of these years, 2019, 2020, 2017, what's this one? 2018, you see that inventory was about double what it is now, about double. And if you go back a few years, you see that housing inventory was literally triple what it is now. So very low inventory, people not selling their homes. Why would they? 25% of them have a mortgage at or below 3%, and 65% of them have a mortgage at or below 4%, and 40% of all the homes in the country have no mortgage at all. There's just no distress in the housing market, okay? So even though you've seen demand fall off quite a bit, especially in the cyclical markets, because prices spiraled out of control and buyers are rejecting that, rightfully so. I agree with the buyers, but you just don't see the inventory loosening. It's still very, very tight. Now, another indicator that's interesting is the median price of homes that are under contract. So in other words, what price are people willing to pull the trigger at? Where are they buying, right? And as this chart shows you, if you're watching on video, I know some are audio, so I always try and explain the visual aids, but check out the YouTube channel to see these charts and grab screenshots of them and whatever. You see the list price of homes under contract is $379,000. That is 1.6%, just a measly 1.6% below the under contract price of last year. So when you see these people talking about how the market is crashing, where is the market crashing? Please tell me. It's simply not happening, because you see the reality of this. Under contract homes, the homes people are actually buying, only 1.6% below last year. All right. Finally, buyer demand is keeping up, very strong buyer demand in this season. You see that the number of homes doing price reductions, very, very low. That has declined sharply. And it was about 40% at the beginning of the year. and it's only 29.8% now. So people aren't really reducing prices in any big way. Anyway, I hope that's helpful. Be sure to join us on Friday. Go to jasonhartman.com/grand for our mentoring clients. We will look forward to seeing you today. We've got a great meeting, and we're launching our new software platform that you're absolutely going to love to make the mentoring process even more effective for you. All right. Thanks again. Happy investing. See you Friday for our free Zoom meeting with Ron Legrand, jasonhartman.com/grand.
The Four Pillars of Wealth. In 1776, Adam Smith published his globally recognized masterpiece entitled The Wealth of Nations that conducted a critical inquiry into the basis and origins of real wealth. The book was primarily written as a rebuttal to the prevailing economic system of mercantilism. Now, mercantilism is best described as a system of economic nationalism, where nations believed that global output is static and monetary wealth is synonymous with physical wealth. Under this system, nations sought to increase the quantity of capital or gold in their possession. Now, the way this goal was accomplished was by restricting trade and imposing tariffs to ensure that capital did not leave the borders of a particular nation. Sound familiar? Well, what Adam Smith rightly noted was that real wealth is not currency or gold, in other words, money, since those things are inanimate and don't produce anything that's of value in use. They're simply a medium of exchange, the value of which is frequently manipulated by speculators and governments. The way for a nation to increase its true wealth is by maximizing the amount of products and services it controls through productivity improvements and trade. This is the fundamental basis of capitalism, and its validity persists to this day. As we've seen, wealth is a term that many refer to, but few truly understand. Most people think about their personal net worth and wealth in terms of money or currency. However, money only represents a medium of exchange for products and services. The fundamental building blocks of these products and services are what constitute real wealth. By placing ourselves directly in control of these building blocks, it creates a layer of immunity against currency manipulation by speculators or governments. These building blocks break down into four pillars of wealth. These pillars are resources, media, banking, and technology. First, let's talk about resources. Resources represent the physical things that are used to create other products and services. Securitized resources are often referred to as commodities, but the pillar of wealth is much more expansive than gold or oil. Fundamentally, a resource is something physical that has a limited supply and growing global demand. One way to control resources is by directly owning oil, mining, farming, or forest product operations. This can be implicitly dangerous since commodity prices are highly volatile and there may be market gyrations that create extremely difficult business conditions. In addition to this, the capital requirements for directly entering the commodity business can be extremely vast. Most people don't possess the necessary capital to directly enter the business of controlling resources, and investing in stock carries difficulties of its own since company management may be incompetent and market prices can be manipulated. The most efficient way to control resources is through packaged commodity investing in assets, such as rental housing, that are built with basic commodities and rented out to tenants. As the demand for building supplies such as wood, petroleum, and concrete increase, it will escalate the replacement cost for new housing. This effect will drive up the value of existing housing and create an opportunity for the owner of packaged commodities to realize profits. Action item. Control resources by investing in packaged commodities so that the price inflation benefits you by pushing up the replacement cost of similar assets. Now let's look at the second pillar, media. Media represents the ability to broadcast ideas and entertainment to multiple people simultaneously. The power of media comes from two distinct vectors. The first is through influence, and the second is from advertising or product revenue. Influence allows you to become a thought leader and shape the outlook of others. By establishing yourself as an expert, it creates a loyal audience of people who are interested in hearing your perspective while shaping their own opinions. Influence is extremely useful when you're attempting to create new business paradigms or carve out a new market niche. Revenue from media is typically produced by income from advertisers or from direct sales of products and services. By creating compelling content that attracts an audience, you have the opportunity to gain revenue from marketing affiliate partners in exchange for access to that audience. The business model of media is built around compelling content that attracted viewers whom advertisers desired. Recent decades have seen seismic changes in media because of the Internet. The channels of audio and video media distribution used to be exclusive property of radio and television networks that were tightly held by a smaller number of companies. The old roadblock to media was access to distribution. But with the advent of blogs, podcasting, and YouTube, it's now possible for any person to broadcast their ideas and entertainment to an unlimited number of people. The new roadblock to media is acquiring an audience with compelling content. With the friction between people providers and consumers of content virtually eliminated by the Internet, there's an unprecedented opportunity available for people who can create compelling content that attracts a significant audience. This opportunity exists both in the sphere of influence and in revenue. Action item: build a personal media empire by creating newsletters, blogs, and podcasts that are dedicated to communicating content on a subject matter where you possess knowledge and experience. Now, the third pillar, banking. Banking represents the ability of an institution to create loans from deposited funds that exceed the amount of those deposits in accordance with the national required ratio between loaned funds and liquid reserves. The way that banks make money with this model is by charging interest on loans and then paying a lower rate of interest on deposits. This spread between the interest rates is what allows the bank to cover its expenses and generate profits. The reason that banking holds such great power in wealth creation is because of its place of prominence in large investment projects. Since most entities do not have sufficient cash reserves to finance projects such as building new factories, office parks, or shopping malls, they must obtain a loan to finance the project. By controlling access to these loans, banks are in a position of extreme power over the creation and preservation of wealth. Unfortunately, this avenue of wealth is not accessible to most people, since banks are highly regulated and it's extremely difficult to launch a new banking entity. However, there is an aspect of banking that can be used to the advantage of individual people. That unique aspect is the willingness of banks to offer long-term fixed-rate loans. These loans are especially powerful when tied to assets such as residential real estate and fixed for a long period, like 30 years. The power of fixed-rate financing comes from its ability to hedge against inflation. When inflation pushes up interest rates and asset prices, people who finance their assets with fixed-rate loans will still experience a fixed interest payment. This produces a tremendous advantage in the volatile marketplace by locking in your cost of borrowing for multiple decades and outsourcing the inflation risk to banks. This tool becomes especially powerful when the fixed-rate debt is used to finance assets that produce cash flow, such as income properties. The cash flow pays for the cost of the loan and gives the owner a tremendous hedge against future inflation. Action item: use fixed-rate debt as a key ingredient in your wealth-building strategy. Finance investments such as income properties with long-term fixed-rate debt to create a powerful inflation hedge and build a catalyst that pushes you toward wealth. Finally, let's look at our fourth pillar, technology. When most people think about technology, it conjures up images of an iPhone or some other slick product or service. Nifty gadgets are certainly a part of technology, but the category is really much more expansive. A holistic understanding of technology must incorporate all ideas, all innovations, and inventions that allow us to do more with the same or less resources. One way of understanding this is to think of technology in the industrial context, where factories, automated machines, and large trucks make it possible to capture economies of scale and drastically reduce average production costs. Another way of understanding the concept is to think in terms of the most scarce resource in the world, which is time. There's no possible way to create more time, which is why technology generates the greatest returns in areas that allow people to use their time more efficiently. One such area is the realm of entertainment. People are always eager for ways to acquire higher quality or more accessible entertainment. Opportunities abound for people and companies who can provide entertainment that's more engaging. From high-definition television to Blu-ray DVDs to iPad tablets, entertainment is a highly lucrative branch of technology. As an investor or entrepreneur, there are many opportunities to use and create technology for our advantage. It's not practical for most people to purchase a technology company, but it is quite possible to realize tremendous gains from technology. As investors, technology allows us to see more deals, interact with more people, and capture more opportunities. As an entrepreneur, the Internet allows immediate outreach to customers across the globe instantaneously. For those entrepreneurs who are technologically astute, it's possible to develop web technology at a relatively low cost to provide technological benefits to customers. Action item. Use and create technology to maximize the efficiency of your time as an investor and entrepreneur. Continually push the edge of your personal productive capacity to find new ways of creating more output with less input. To maximize the efficiency of your time as an investor and entrepreneur. Continually push the edge of your personal productive capacity to find new ways of creating more output with less input.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.